Right. So order blocks, with only 3 order blocks that are important when it comes to smart money concept. You only have 3 order blocks that you're going to find on the chart. So the first common type of order block is the standard order block. Standard order block. Standard order block. So the standard order block is the normal order block that you find being mentioned or being talked about on your YouTube, on your Instagrams, everywhere. That's the normal type of order block. The first order block is called the standard order block. So the standard order block, how is it structured? The standard order block basically is, for example, once you've identified market structure, once you've identified your market structure, whether we're going up or down, let me see. Once you've identified your market structure that we're going up or down here, once you've identified your market structure, once you've identified your market structure, let's say we're in a bullish market. Once you've identified your market structure, let's say we're in a bullish market. The standard order block, these are the last, for example, in an uptrend like that, the last bearish candle before we went up, the last bearish candle before the market pushed up, the last bearish candle before the market pushed up. So you find it maybe somewhere here at the bottom here, somewhere there at the bottom there. Then here as well, you might find another order block. So these ones are called the bullish order blocks. The last bearish candle before the market went up. So that's the standard order block. That's the standard order block. So chart example now, this is where right now we're on Euro USD. So we want to identify the standard order blocks on the chart, the standard order blocks only. Standard order blocks, the standard order blocks. So the last bullish candle before we went down, because this is a downtrending market. This market is a downtrending market, as you can see. It's a downtrending market, as you can see. Downtrending market. So in this downtrending moment, you want to identify bearish standard order blocks, bearish standard order blocks. Right, starting from there, before this market pushed down like this, before this market pushed down like that. Okay, or let's start from here. Like this. That's an order block there. Order block. If you check, the market came back to the order block. Let's look for the others. Here as well, there's an order block, even though the market didn't come back here. This was an order block. So let's move on. This was an order block before the continuation of the bearish move. That was an order block here. This was an order block like this. Right, let's look at other areas. Let's look at other areas. Let's look at other areas. We're only looking for the standard order blocks. So order blocks, you won't just find them anywhere lying on the market. But it depends now on the time frame as well that you're using. The lower time frames, as you know, they carry quite a number of the order blocks, more than the higher time frames. More than the higher time frames. So let's just look at the month of July. Okay. This is the month of July from here. Right. This was an upward movement. Okay. This was an upward movement. This was an uptrending market, as you can see. Uptrending market, something like that. This was an uptrending market at that moment. So, want to identify bullish standard order blocks. We start from the bottom here. Nothing. Okay. Right here is an order block. That is an order block before this bullish move. That block structure before this bullish move, that block structure here. We had that area as an order block. With that area as an order block, this area here, that's a standard order block, bullish standard order block. So if you check, the market came back to the order block, then boom, then went all the way up. As we went up, let's look for another order block. That's another order block, standard order block again. Market came back, went up. We have another order block. Where can we find another order block? Where can we find another order block? Another order block somewhere here. That's an order block. Market came, pushed, came back again to the order block, then went all the way up. So these are simple examples of the standard order blocks that we actually have on the market. So these order blocks, and they're not just found everywhere. Order blocks are very special moments on the market. They're not just found everywhere, anywhere on the market. There are special moments on the market. So how does one enter such trades on order blocks? So using standard order blocks for entries, you simply look at the order block. Once you've identified the order block, this was the order block, right? So being a smart money concept trader, you know that you are looking to take the entries exactly on the order blocks. So the order blocks are actually the point of interest that you're looking at. For example, here it came to the order block. So what you do, you can enter immediately as the market touches and rejects on the order block like that. Once you enter there, I like the entries, especially after the rejection. When the market comes to order block, then rejects there like that. That's where I can take the entry, then the stop loss just below the order block, which was here. Then the TP, I'm looking either to the buy side liquidity at the top or the previous highs at the top, which was hit there. So here, either I could have looked at that level, at that area there, the top there. It was reached, it was hit, the TP was hit. That was something like 1:7. But if ever you go to a smaller time frame, you can actually get a smaller risk, a bigger risk compared to reward. So if let's just scale down to 30-minute or 15-minute. Let's go to 15-minute. So that you see that you could have actually gotten a bigger risk compared to reward on that same opportunity. One could have gotten a bigger risk compared to reward. So this is 30-minute time frame. 30-minute time frame, same opportunity on the order block there. Same opportunity. Right, so you refine the order block. Let's try to refine the order block on the 30-minute. Once you refine it like that, that's how you can actually get a bigger risk compared to reward. Right, so if I do that, maybe I was not even able to take the entry. So it's okay as it is on the 1 hour like that. It's okay as it is like that. So your stop loss is simply going to be just below the order block. That was the safest stop loss that one could have taken. Below the order block, that was the safest stop loss. Then TP target those the next buy side liquidity from your entry point. So that was the first entry. You could have gotten that buy. You could have gotten this buy. Then you construct this order block as well. Before they pushed up that broke structure, this was the last bearish candle. So that's your standard order block. Then the market came back to the order block. So after coming back to the order block, what you do, you simply enter there on the order block. As I said, your stop loss below the order block. Stop loss below the order block like that. Your stop loss below the order block. Then your TP, you're looking either at the most recent highs. For example, if you look at this area here, to me, this is a key area here. For me, this is a key area. That is a key area because it's simply it's something like a support or resistance flip there, which was the recent most relevant highs that I could have looked at. It was also a reasonable risk compared to reward. So that one could have been my first TP, second TP, maybe around there. First TP was it, as you can see. So let's look at this last order block that was there. This last order block that was there, this last order block. So here now, this was the order block. So this other order block that we have, we also have two types of order blocks. So we have this standard order block here, and also another type of order block that we're going to mention in the next video, which is going to be a different kind of order block. That is going to be this one, but I'm not going to talk about it in this segment. So I'm going to simply stick to these standard order blocks. So here you could have ended using this standard order block. You could have simply entered your buys for this Euro USD. You could have entered, you could have waited for the rejection, price to reject, then enter your stop loss just below this wick like that. Your first TP is this level, which was hit, if you check. Then your second TP, maybe that other level there at the top. Or you can also use Fibonacci's as well for TP targets. So roughly, that's how you identify standard order blocks on your chart, and that's how you enter trades based on standard order blocks. So first things first, you identify the structure. For example, this was a downward market structure, downtrending market structure. So in a downtrending market structure, what I do is I look for the bearish order blocks. And you won't just find them anywhere on the market. You won't just find them anywhere on the chart. They are very special areas on the market, very special moments on the market. Let me just see. This area here, that's a standard order block. Price came, bounced on came and respected the order block, as you can see. So that one could have been a very interesting sell opportunity. Your TP could have targeted either these lows here. You have targeted those lows there as your first target for the TP. You have targeted those lows. So you see now how big the risk is compared to the reward. So here it came first time, rejected. So your stop loss was just supposed to be above the order block, above the order block like that. So whether you took it there, the stop loss was simply going to be above. If you check, the stop loss was never hit. The market played around the opportunity. So there, all the way like that, all the way to the target, 1:15 risk compared to reward, 1:15 risk compared to reward, 1:15 risk compared to reward. So just previously, the market is now in a bullish market. In a bullish market, we look for the bullish order blocks. So I'm going to identify my bullish order block. First bullish order block that I'm seeing is this moment here. market created this order block, came back to this order block, As it came back to this order block, we'd have taken this buy, taken that buy upon the rejection like that. Stop loss below the order block. TP, final TP, I could have targeted this recent order block area here. That area here. That recent order block area I could have taken it as my final TP for this buys of the Euro USD. So that was the 1:19 risk compared to reward. 1:19 risk compared to reward, which was a good one. So now the market broke structure now, because we're now market broke structure, as you can see. Market broke structure. We're now downtrending. So in a downtrending market now, we now need to look for the bearish order blocks. We now need to look for the bearish order blocks. Already I can see that the first bearish order block, I can see it here. That was an opportunity to actually sell. That was an opportunity to sell this one. So the target is either this order block here or the liquidity to the downside here, sell side liquidity at the bottom here. That can also be the target for those sales that are currently running for Euro USD at the bottom there like that. Unless the market comes back and returns to maybe this order block here, this order block, at that order block as well, sales can be taken. But if it doesn't come all the way there, simply look at this order blocks further down there. So that is what we are looking at when we are talking about standard order blocks. That is how you identify standard order blocks, and that is how you enter and exit using standard order blocks.